amazing time in the world. Like, I think we all agree we're living through an historic moment. So I think it's fitting that we need to start any conversation these days with a fairly wide aperture. I'm really curious how people in your positions are thinking about processing what's going on in the world. So Pamela, maybe I'll start with you. Of all the things, someone trying to, scale up a business like you are, what's the top of mind for you more often than not these days of that long list of things that could throw a business off at any moment? What do you find what do you find yourself spending most of your time on?
Yeah, for sure. Hi, everyone. Good morning. Pamela Draper, President of Digital Commerce Payments, which is part of the digital commerce group of companies, including DC Bank. I think, wow, it's a really broad topic, and there's so much we could probably spend all morning just on that. But we were just talking this morning about what a busy kind of spring conference and events session it's been. So I'm going to pull kind of a couple themes from that, I think. One, obviously, massively changing political landscape, both north and south of the border. And one of the themes that we've been picking at is that an opportunity or is that a threat? I think in the Canadian fintech landscape, we can really sort of think of that as a potential opportunity. There's a lot of focus on being homegrown in Canada. So for businesses that are truly Canadian like ours, we're sort of seeing a lot of momentum behind people wanting to pick up Canadian partners and support the Canadian ecosystem at large. So I think that's one thing. And then within Canada, there's also a lot changing. Real-time rails, I'm sure, will come up in our conversation. Will that eventually happen? It's been coming for many, many years. I think 2026 might actually be the year based on what we're seeing. So new technologies and new opportunities to take advantage of there. I would put open banking in that same category. Canada needs sort of a regulatory framework around that. So I'm sure that's probably a theme we'll dive into a little more later on. But broadly, I think we're really excited about what's happening in Canada. I think Canada's lagged behind the world a little bit when it comes to fintech, but it feels like, being within the industry, that there's real momentum now, and we're eager to take advantage of that.
Okay, let's come back to that in a second, but I want to give Will a shot at that question. You've spent you've been out in the world. We were talking about your time you spent in Dubai just before we got up on stage. I mean, what does that experience lend to the moment we're in now, Will? What do you find yourself thinking about most often?
Yeah, so I'll start out by saying I'm Will Killiar. I'm the Chief Client Officer at People's Group. And for those of you that don't know, pardon me, we're a privately held bank that really looks at powering the ecosystem, the fintech ecosystem here in Canada, and that's a privileged position. Just to come back to what Kevin was saying about the globality and bringing different views, and then to touch base on what Pam was saying about elbows up and elbows out in Canada. I think that Canada's fortunate that we have a lot of talent here that has global experience, and what I'm looking forward to is embracing that global experience and looking at how we can move things forward faster in Canada. So again, at People's Group, what we do is really power the challenger bank and other fintech companies in Canada. And that's a privileged position. Transparency is important, and access is important. So Pam also talked about the RTR, open banking. We're leading out there in the market, trying to understand how we can develop APIs and touch points and empower the ecosystem on a continued basis. So apart from taco, and for those of you that don't know what that means, Trump always changes whatever. I don't even know. What?
Trump always chickens out.
Trump always chickens out. Thanks. I've heard so many Trump-isms I can't even remember. And as you could tell by my accent, I'm not Canadian. I identify as a global citizen. And but I am a proud U.S. passport holder. And I would say, too, as it relates to what's preoccupying my mind right now, is this too shall pass, and we have to stay the course. Canada is truly blessed with great technology. E-transfer has been around for over 25 years. I think the key thing for us here in this market is just to heads down, elbows up, and move forward at a faster pace, and that's what I'm looking forward to in the next year.
What's changed specifically in the thinking at People's over the past few months? I mean, this is a massive shock. So how have you absorbed it there? What have you pivoted in any way? Talk to us a bit about that.
You know, Kevin, we haven't seen much contagion or anything. Obviously, from a risk perspective, we're very aware of what's going on south of the border. But again, you know, we have a very large lending organization. We do a lot in that space. And obviously, we do a lot in payments as well. We don't do first-line cross-border payments, although with the announcement, stablecoin and, you know, what Stripe and others are doing out there now, Chime and their announcement, I think that, you know, that will change as it relates to how money is transferred cross-border. But for right now, we're very focused on Canada, and for global companies that want to come into Canada, more specifically for Canadian companies that want to come into Canada, how can we empower them? Given the regulatory environment, how can we move the regulatory environment forward to empower Canadian fintechs and startups? And we'll talk more about VC and stuff later, but that's a big touch point for me.
What about you, Pamela? How have you adjusted in the last few months? Have you had to rethink some of the strategies you might have had, say, 6-9 months ago, or how you how are you pivoting to either protect yourself and survive all this, or take advantage of it?
Yeah, I don't think we've really pivoted much yet. I was moderating a panel last week with Hamid, CEO of VoPay, and his point was, you know, there's crises all the time, and just if you responded and reacted to every single crisis, your business would be in constant turmoil. So put your head down and focus on your product and focus on your customers, and that ultimately helps you excel in the end. But I would just say that for us, we are a Canadian bank. We have a Schedule I license similar to a BMO or an RBC, but we use it very differently. We use it really purely to facilitate payments, online payments, and we also do card issuing and processing. So really kind of powering that fintech movement in Canada. And we've been busier than we've ever been just because of the momentum I mentioned kind of in the intro. So we've been focusing on that. And I think from that position of strength within Canada, looking potentially at some global opportunities, not necessarily in the US, but I think there's other ones out there. Maybe that's the UK or Australia, and thinking about our business that has been so far 100% based in Canada, taking that expertise and what we built here and looking at potential other markets that we can take advantage of.
Say a little more. What opportunities do you see out in the world, or why are you thinking that way?
So for us, I think it's two things. The first, our shareholders, Jeff Smith and Susan Anderson, they ran the world's second largest global ATM company before they started this business. And their strategy that they're sort of rinsing and repeating with us is they grew organically up to a certain point, and then they started doing M&A to continue to expand. We've built our business for 7 years since they sold that business from 2018 through till today, 100% organically, and now we're starting to think about that M&A again from that strong position of cash flow and that base of business that we built. But we've also, in the course of those 7-8 years, built up an entire API-enabled payments tech stack to service every major rail in Canada. E-transfer, EFT, card issuing and processing, as I mentioned. We just entered the acquiring space last year. So we've sort of taken our product in Canada as far as we can. So when we think about M&A, we think about two different things. One would be kind of adding on additional products in the what I would call value-added payments technology. So they're not payment specific, but they're payments adjacent, like expense management or property management. Value-added technologies that affect businesses that ultimately process a lot of payments. And then the second thing that we think about is expanding into other jurisdictions.
A question I have for both of you, I mean, given you're sort of carved out a nice niche for yourselves in Canada as partner banks, why not go the next step? Like why not sort of jump up into the big leagues with the obvious players, or even like get into more retail banking, more forward-facing banking? Why stay in the background?
Well, it's a funny question because I don't really view it as the background. I view it as playing in our core competency and playing in the strength that we've built. So we have a banking license, but like I said, we're more of a fintech mindset with that banking license, which provides us access to all of the rails. And we think we're the strongest player in that space in Canada. And by doing that, we don't really get distracted by all the other things The other thing that's really protected us that you've seen play out in the US is we don't lend, we operate on a full reserve basis, we don't even invest in anything more risky than sort of a GIC type product for our client funds. So if all of our clients came to us today and said, I want my funds back, because we do hold funds on deposits for our corporate clients to facilitate payments, but it's material, it's probably $500 million at any given point in time. If they all came and said, we want that back today, we'd be able to give it to them today.
And Will, how does Peoples think about that? Are you not a little more ambitious? You wouldn't like to have a little more of the limelight?
I think we do. At times, it's too much of the limelight. I think that, there aren't many players in this space. Pam's just articulated a very different view than what we have. We're very focused on Canada, investing in Canada, and taking the best globally, matching that with Canadian needs and opportunities, and bringing that to this market. We've seen triple-digit growth year on year in our EFT and our e-transfer business. We're one of the largest request to pay, if not the largest request to pay institution with Interac. We're waiting on the new pricing to come in from Interac. And we're focused on the economics around that and access. I think one of the things that we're challenged with in this market is the expense base. And I think that cost of capital, coming back to your question, why aren't we a last mile bank? I would put it, we know our space. We dominate in that space. We're happy in that space. We've been in this market for 40 plus years. We're a native lender, and we're all about empowering Canadians and giving Canadians better access to financial services across trading, across banking, lending, you name it, money transfer. So again, as it relates to foreign interest, they pretty much lie in the diaspora of multinational Canadians here that want to send money home. So we're thinking of it that way, as opposed to how can we expand abroad. As I said, we have a bank in the US, a sister bank, CFSB, and so those are our ambitions. But there are some limiting factors related to regulation, and I would like to see things progress in Canada, and that's our focus, not trying to do things for, global opportunities, but more for Canadians. And that's part of the reason I'm here.
Right. I have that. You talked about obstacles. I want to put that question to both of you. Like, what are the obstacles right now? Like, we'll start with you, Will. Like, what's maybe the big barrier that you at Peoples are trying to figure out a way around right now?
There's a lot, and I think that one of the things we've done a really good job of is partnering with regulators so that regulators understand the market and what PSPs, what it means to be an MSB, what it means to be a fintech in this market, and how can we invest. I mean, to make some would view a controversial comment, when you talk to institutional wealth and sovereign wealth here in this country, 80% of Canadian investments are abroad. That's painful to hear. And we have phenomenal intellectual capital here in Calgary, in Edmonton, in Toronto, in Montreal. We need to invest local. And so we need to encourage that. Regulation plays a large part. The tax regime is another concern, C-47. The others have been a deterrent here. We're working through that. But I think that as it relates to open banking, the U.S. is going to be further delayed. I was talking to a few people this morning. It could potentially implode. Open banking is moving fast here. Flinks has done a good job. Great opportunities. Who wins? Canadians. How does Peoples play a role in that? We're that last mile. We're those hooks. We're those partners that can make it happen so that Canadians win. We issue 50 million prepaid debit cards. I think we have about 60% of the market. And as I said, we're a dominant player in the spaces we play in. That's not a matter of pride. That's not a matter of being out there in the limelight. But what that is empowering Canadians. And that's what we're all about.
And Pamela, what's the obstacle that's the biggest one facing you guys right now? What do you need to get through first to sort of make good on these expansion plans you're talking about?
Yeah, I don't think necessarily one obstacle, but I kind of put three different categories of things that have not necessarily hindered us, but that fintechs here think about. So number one is that the prior government we have, and the same party, but a different leader. So hopeful that maybe more progress can be made towards certain initiatives under the new leader and less deterrence. Will mentioned the tax, so things like the capital gain tax came out, and you see Shopify potentially moving south of the border. That really impacts fintechs. Things like delays in real-time rails, but also an open banking regulatory framework has impacted fintechs. And then I think on a smaller level, if you look at Interac, a product that we all use as fintechs, there's been a bit of a moat built around the larger institutions that use Interac. So in terms of the pricing and also the access to Interac, the pricing is skewed on a volume basis currently. So if you're a very large bank like an RBC, you're obviously always going to have the lowest possible pricing. When you think about fintechs, that impacts them. But as Will mentioned, potential changes coming to that pricing. It's been coming for a while, so eager to see that come out. But if all of those things play out, a more favorable tax regime or a reversal of the prior Liberal leader, a more favorable regulatory regime in terms of what that actual looks like, so more certainty so that companies can build their businesses and know what that regulatory framework is going to look like, and then a different environment with respect to Interac, which we've been told is coming as well.
Well, let's work through some of those, get sort of updates on how you're feeling about some of those big 2 or 3 issues. Real-time rail. We at The Logic had a story coming out of the Payment Summit suggesting that people are feeling pretty good about it. Like as in it's going to happen. I don't know if people feel good about waiting forever for that to happen, but there's some sense that it's happening. Pamela, is that also your sense? Is it happening?
Yeah, absolutely. So they've allowed us select a number of institutions to start developing and thinking about real-time rails. So we've been in direct contact with Payments Canada to get access to the technology, what that will look like, and start building out our product with respect to real-time rails for the past year. And we're being told with some relative certainty that kind of early in 2026, we should be ready to think about launching that in 2026.
Will, you concur?
Yes, but you have to define the RTR. I mean, again, we've had near real-time email money and mobile money transfer in this country for 25 years. You could question whether or not we even needed, quote unquote, a real-time rail with enhanced data. We should have had it a long time ago. Okay, that aside, I mean, when I was at Interac, we obviously won the exchange portion, and it's been a journey. I won't say anything more than that. But pricing is another thing that really needs to happen with Interac. We're waiting on that. I'll say that again. And we haven't spoken about ARPA, our RPAA. That's a game changer for us. We're going to be ready in September for that. And we'll be ready in 2025, 26, 27, 28. Whenever the RTR is ready, we'll be there. Fraud solutioning, there's a lot to unpack there. We have a lot to consider. And I want to come back to another challenge that we have. I think that in Canada, one of the things that needs to happen is our capital adequacy ratios as a bank are much higher than that of others. So it's a cost of capital, it's a cost of doing business that we're encumbered with, that we have to pass on to fintechs, that fintechs then say, oh my gosh, you're so expensive compared to. And I won't say the name, but I was talking to a big 5 institution who invest heavily in fintechs. And it was a social gathering, and they said, hey, I want to talk with you because we're making some investments in companies and they need a bank. And I'm like, well, aren't you a bank? You know, and again, it's not like I want to lose business, but, you know, we have a lot of business. We're very busy. I would argue at times we're too busy. And we need to share that wealth. Hundreds of billions of dollars in Canada sit idle that need to be deployed to really benefit, again, I'll say it, probably a 7th or 8th time, to benefit Canadians. That's the reason we're called People's Group. We're for the people. And that's what I want to see change. RTR will happen. We'll be ready. Can't wait. Is it going to be a game changer? Don't really know. We're already using rails effectively. ARPA is more interesting to me, and open banking.
All right, two questions there. One, like, what's RPAW? This is a new one to me. Sorry if the rest of the audience knows what it is, but I'm going to take
Retail
advantage and
payments.
learn something.
Retail payments infrastructure, basically, that gives, these 3,500, quote unquote, I think I'm quoting the Bank of Canada there, 3,500 PSPs have access to the rails. So it's an infrastructure framework. It was called RPOF, Retail Payments Operational Framework or something. I get lost in all these acronyms, but AI, I know what that means. But the point is an infrastructure to give access, and we've been waiting on that. So that's more interesting to me, and I think we'll do a lot more for Canadians than a real-time rail. That's my view.
And just to come back to that anecdote you shared with your conversation with the Big Five banker, why didn't that bank want to put up the money, or why was he looking for help from you?
I've spent, 10 years in private equity and venture capital, and I've seen major investments by the major networks around the world, by major banks, blah, blah, blah. They don't pat the horse they own. This is the Texan coming out in me, but or the Calgarian or whatever. But basically, we've got to do more. Whenever you make an investment, it's not just the money that the fintech or the startup needs. They need the network. They need the intellectual capital. They need the access. And it's disappointing because the Big Five should be the Big Six, whatever they are now. We should be investing, and they should be sharing some of that positive burden of growing the infrastructure in Canada to give Canadians more access and better choice.
Pamela, do you have some thoughts on what Will just shared there?
Yeah, absolutely. My experience with banks, and prior to joining this company with our shareholders, I spent 14 years with Big Five banks, 7 with CIBC and 7 with BMO. And I think the problem is when fintechs can't use them, it is twofold. One, the banks aren't comfortable and they don't have necessarily the fintech-focused compliance regime to service these companies. So they've had maybe some missteps along the way, or they've seen some missteps in the market, whether it's here or in the US, and they get scared and their compliance teams won't approve them or won't provide them with access. But even if they did, the banks don't have the technology that we've built out to allow fintechs to interact with the payment rails. So the fintechs would then have to build that themselves to the extent that the bank's technology leaves off. The Big Five banks' technology, it was built on platforms that were built kind of in the 60s, 70s, and 80s, and then there's a patchwork of infrastructure updating that to get it to 2025 as we sit today. So for our company, why people come to us is we have the banking license, but we focused on the API technology to allow the access to those banking rails. Typically what fintechs would have to do is they'd have to go get a bank, and they'd have to go either build in-house their own technology or hire an alternative company, a developing company, to build out that technology for them. We focus on that one-stop shop where you can get access, plus you can get access to the technology to build the platform that you're looking for. They'll never get that from, not never, but they're very far from getting that from a Big Five bank in Canada. There's a lot that would need to be developed for that to happen.
That's interesting. Okay, open banking. We got about 6 minutes left. I don't know if that's maybe either nowhere near enough time or too much time. Pamela, okay, open banking. So real-time rails on track, 2026. Open banking.
We need a framework from the government to say what is going to be allowed and what is not going to be allowed. The prior Liberal government failed to deliver on that in their entire time that Trudeau was in office. So with anything in financial technology, whether that's cryptocurrency or whether it's open banking, you need to know the rules of play, and you need to have a sandbox to play in and develop those rules. If you don't know that, you never really know if you're going to get in trouble or not, so you hold back. I was on a roundtable in Calgary during Inventures with our Minister of Innovation and Technology, Nate Glubich, and he made a really interesting point, and it was about Uber, and I'll bring this back to open banking, but he said, when Uber first came about globally, Canadians traveled the world and saw the conveniences that Uber had to offer, and then came back home and demanded that the government allow Uber to operate in Canada, and it happened. With banking, we don't actually realize as Canadians the convenience, unless you've lived or traveled extensively abroad, but really lived, you don't realize the conveniences that every other, not every other, but major global players, so Europe, LATAM, certainly, even Africa, the conveniences in everyday banking and financial technology apps that they enjoy, because even if we travel to these places, we don't bank in these places. So we never come back home and demand that our government accelerate things like the open banking framework, which have been far accelerated in other jurisdictions.
Will, what's your feeling about open banking?
I mean, just to dovetail on that last point, we have people from all over the world in Canada, so we know what good banking is. I mean, I spent a number of years in East Africa and M-Pesa, Safaricom. I mean, they've had mobile money, mobile to mobile, account to account, transfer for, I don't even know, 7, 8 years now. They're trading mobile minutes as fiat currency. That's pretty progressive, but that's been in Africa, to my knowledge, for 15 plus years. I got kind of lost in that comment, but open banking to me is two things. It's access and data. Access is key. We need security. We need a national ID system that can also work, that give people security. And when I say a national ID system that work, Interact ID and some of the assets that they acquired over the past four years, provide, number one, identification of the person that's accessing the system so that they can supply data in a safe, secure way and it can be validated. Part of the things that worries me about open banking is hallucination and data that's out there that's created. It's creating public persona, out there that aren't accurate, that are, false. And so, breaking it down, we need safe, secure access. Then we need framework around the data. I know FDX is supplying some of that. In the US, we'll see where that goes. But again, and then what's done with the data. And Minister Bain started this, I think, when I first came to Canada, like 6, 7 years ago, went nowhere. Minister Boissonneau, then you had Abraham and the great work that he did on the open banking specification, and then it stops. But Abraham, I don't know if he's here, but if he was here, he would say, okay, what's next? We have a framework, we have 10 pages, what's next? So again, I've said it and I'll say it again, I'm anxious. Canada has a lot to offer and we just need to bring this to life. I'm grateful to the Flinks guys. I mean, I think they did a lot for Canadians in kind of stoking and provoking to do better. And I think we need more catalysts for open banking.
Gary wrote a good op-ed on this. I saw it over the weekend. I don't know if maybe it was published last week. Regardless, Gary made the point or urged the government to accelerate work on open banking. What does that look like? I mean, because there was some work being done in towards the end of the Trudeau government. Things were in place. The government announced that it was moving forward. So some stuff's happening. One, Will, where's it at? To the extent that you know, and to Gary's urging to accelerate this process, what does that look like? How fast could we wrap this up reasonably?
Reasonably wrapping it up should be within a year, I think, given what's out there. Problem is the ministers turn over, so the file changes hands a lot. It's not part of a political agenda. Prime Minister Carney being, quote unquote, a banker and a business person and an investor, I'm optimistic. I think that with a mandate from the top, it could happen. I didn't see it being a major mandate in the Trudeau government in the time that I've been here.
Okay, we got about a minute left. Same question to you, Pamela. Good way to wrap it up. What is a reasonable timeline to finish this up, and any sort of insights you have on where this process is actually at, and what we should expect over the next number of months?
I mean, I think a reasonable timeline is that it would have already been done by now, so ASAP. Otherwise, every day you're risking falling behind on a global scale. But I think it comes back to that point that I made earlier. And again, this is one of the things that the Minister of Innovation and Technology in Alberta emphasizes, that the people need to demand it. Because to Will's point, it's not on any one politician's agenda because people haven't gone and demanded it. So I think we need to find a way to show the government that it's important to society.
Great, thank you. 30 seconds left. I'm so tempted to ask more questions, but Gary, yeah, that's what I thought. All right, thank you.
Thank you,
Pamela,
Kevin.
Will,
Thank you.
everyone.
Thank you very much.
Thanks, Pam.